It's time to face the harsh reality of the financial world. First Republic Bank, a California-based financial institution, has become the third U.S. bank to require a bailout this week. The bank was on the brink of collapse, requiring a whopping $30 billion to save it from sinking. While this bailout was made possible by some of the largest financial institutions in the U.S., including Bank of America, J.P. Morgan, Wells Fargo, Goldman Sachs, and Morgan Stanley, to name a few, this rescue is not a long-term solution. This bailout has raised concerns about other companies that may be exposed to the bigger systemic problem. Treasury Secretary Janet Yellen has tried to calm these concerns by insisting that the banking system is sound. However, it's tough to ignore the reality that this bailout is only a small fraction of the amount of money that First Republic has raised over the last week or so. The fact is, we're in deep trouble, and the banking system is not as sound as we thought. But, before we get started, are you worried about the status of the American economy? Do you want to stay ahead of the curve and make informed decisions? Look no further than Market Meltdown TV. Our channel provides expert analysis, up-to-date news, and practical tips to help you navigate the upcoming recession or even worse, depression. Don't miss out on our latest content. Hit the subscribe button, give us a thumbs up, and share with your fellow Americans to join the Market Meltdown TV community today. To understand why this is such a big deal, we need to look at First Republic Bank's profile. Founded in 1985, the bank had $212 billion in assets and $176 billion in deposits at the end of 2022. Unfortunately, about 70% of its deposits are uninsured, which is well above the median of 55% for medium-sized banks. This high percentage of uninsured deposits is one of the reasons why investors and customers are concerned. The bank's risk profile is also high, according to industry experts. A chart that plots the risk profile of various U.S. banks shows that First Republic Bank is in the high-risk category, along with Silicon Valley Bank and Signature Bank. This is due to its low percentage of deposits with retail depositors and high loans and securities as a percentage of deposits, which is coming out above 110%. These concerns have resulted in a collapse of the bank's share price, which has been suspended 17 times in one day. The bank has been frantically trying to put facilities in place to shore up its balance sheet. However, this has resulted in a series of multiple bailout deals, which total $229 billion of finance. It's tough to predict whether this is enough to save the bank from complete collapse. While the bank has secured a $30 billion cash injection from some of the largest financial institutions in the U.S., it remains to be seen whether this is a long-term solution. The fact remains that the bank has raised over $200 billion in a week or so, and this bailout only accounts for a fraction of that amount. The bonds were a complete disaster, resulting in a staggering loss of $1.8 billion for the already struggling First Republic Bank. This has only exacerbated their liquidity issues, and to make matters worse, the shares of Silicon Valley Bank have been suspended, ultimately leading to its collapse. Although First Republic has managed to raise an impressive $229 billion in a week, the fact that they only have $34 billion in cash available highlights the ongoing major problems that the bank is facing. The loans and securities outstanding now exceed customer deposits, indicating that they have invested far more than they can afford. Their bonds are now seriously underwater, and the bank will undoubtedly incur massive losses when they sell them. The bank's recent $30 billion deposit facility, put together by 11 banks, doesn't offer much comfort as it's a very loose commitment and could be removed after 120 days. The bank's falling share price has investors worried, and it's likely that there will be continued volatility in the banking markets as more concerns arise. With Credit Suisse having recently received a $54 billion bailout, it's apparent that other banks will also require bailouts. Unfortunately, First Republic is at the top of the list of risky banks in the USA, and investors are nervous about its fate. It's unclear where the next round of funding will come from, and the bank may find itself in a liquidity crisis in the coming weeks, leading to potential collapse. As we move forward, we must recognize that this is not an isolated incident. There are other banks out there that are exposed to the same systemic risks that have led to First Republic Bank's collapse. It's time for the government and industry leaders to take a closer look at the financial system and address the root cause of the problem before it's too late. In conclusion, the rescue of First Republic Bank may have been possible this time, but it's not a long-term solution. The banking system is in trouble, and we must address the underlying issues before it's too late. The collapse of First Republic Bank is a wake-up call to the industry and government to take action and prevent the next financial crisis. Thanks for tuning in to Market Meltdown TV. We hope our expert analysis, news updates, and practical tips have helped you stay ahead of the curve in today's volatile market. If you enjoyed this video and found it helpful, please hit the like button, subscribe to our channel, and share it with your friends and fellow Americans. Your support helps us bring you even more valuable content. Remember to hit the bell icon to get notified when we release new videos. Thanks again for watching, and we'll see you in the next one.